What if I told you the Federal Reserve might actually consider bringing interest rates all the way back to zero? Not next year, not in some hypothetical future, but as a very real, very possible response to a weakening economy in 2025. Now, pause for a minute and imagine what that would mean. It would mean that mortgage rates, and this is good news, could crash below 3%. Also, good news, the stock market might explode in short term gains. Wait though, your savings, well, those are absolutely torched by inflation. Now, we're not talking conspiracy theories. This is coming straight from the mouths of top economists and leaked analysis from Fed observers. And if history is any guide, this move could signal that the Fed sees something coming that the rest of us, well, we're not prepared for. Now, I remember 2008 like it was yesterday. The Fed slashed rates to zero, trying to prevent an all out collapse. Now, we all know how that went: bailouts, foreclosures, and economic carnage. Now, the talk of zero rates is back on the table, and it's not a good sign. But here's the catch: this time, we're entering into it with $34 trillion in national debt, corporate debt at record highs, and inflation still lurking in the shadows. So the big question isn't will they drop rates, it's what kind of economic disaster are they trying to quietly prepare us for? So just before we take a deep dive into that question, it's imperative you hit that like button and subscribe so that you get notified the minute we produce another game-changing video that affects your finances. And I promise you'll appreciate it. So buckle up and let's plunge straight in. So behind closed doors, there's been a lot of chatter. Financial journalists from the Wall Street Journal and Bloomberg are quietly reporting that some members of the Fed are warming to the idea of a rate reset in early 2026, even as Powell publicly maintains a hawkish tone. So why the double talk? Well, because they can't admit what's really happening without setting off a market panic. Now, the latest GDP revisions show slowing growth. Small bankruptcies, well, they're up 37% year over year. And consumer credit delinquencies, well, they're spiking across auto loans, credit cards, and personal lending. So the Fed's typical response to an economic slowdown is to slash rates. But with the Fed funds rate currently at 5.25%, bringing it back to zero, well, that will be a shockwave through the entire financial system and a desperate signal that the soft landing didn't happen. Now, let's be clear. Zero interest rates might sound like a dream for borrowers, but as always, they come with a cost. Now, here's what happens when rates drop to zero: easy credit, massive stock and real estate bubbles, savings accounts, well, goodbye interest, inflation, likely to rear its ugly head again. In fact, we saw this exact playbook post 2008. If you remember, housing prices soared, asset inequality skyrocketed, and by 2022, inflation reached levels that we hadn't seen for over 30 years. So, if the Fed pulls the trigger on zero rates again, well, you can expect short-time sugar highs followed by long-term volatility, also asset mispricing, and possibly another crash, but this time with fewer tools left to stop it. So, coming up in just a moment, what would a return to zero rates actually mean for your wallet? Now, we'll break down the effects on your savings, your mortgage, your credit cards, and your investments. And spoiler alert, sadly, not everyone wins, so stick with me. So here's where it gets a little bit personal. If the Fed drops rates back to zero, here's how it plays out on Main Street. So first of all, mortgages. So if you're buying a house, this could lower your interest rate significantly. And that's great if prices don't rise again overnight. But don't expect real estate bargains. Prices are still elevated. When it comes to credit cards, Most credit card APRs are tied to the prime rate, but they rarely fall in sync with Fed cuts. What's the translation? Well, you might not get the relief you expect. Now, what about jobs? Well, in theory, low rates boost hiring. But in reality, if the Fed cuts because the economy is tanking, well, layoffs usually precede any hiring uptick. What about your savings accounts and the CDs? Well, back to earning 0.01% interest, folks. Now, this is terrible for retirees and anyone who's trying to preserve wealth. What about your investments? Well, stocks often rally short term, but be warned. The markets might view the return to zero as a signal that we're heading for a serious recession. Now, this isn't all good and it isn't all bad, but it is very complex. Ignoring it? Well, that, my friends, is financially dangerous. So why would the Fed even consider this? Well, the Fed's primary tools are interest rates and balance sheet manipulation. So if inflation continues cooling and unemployment starts ticking up, well, the Fed will feel compelled to act. Now, the key word here is deflation, which of course terrifies central banks. If demand starts falling off a cliff, well, the Fed might preemptively slash rates to zero to stop that spiral. But here's the kicker, and there's always a kicker. If we end up back at zero with inflation still above 3%, well, the Fed risks stagflation. And that's a toxic mix of low growth and high prices. And if they get it wrong again, there may be no ammo left to fight the next crisis. Now, that's why this conversation isn't just academic. It affects everything from your job security all the way through to your retirement plans. So what's the verdict? Well, the Fed returning to zero interest rates might look like a gift, but it could be a signal that the economy is in very serious trouble behind the scenes, which, by the way, is what I suspect. So before you celebrate those low mortgage rates, remember, it could mean your job is at risk. Your savings might stop growing, and inflation could strike back harder than ever before. So now I want to hear from you. Do you think the Fed should bring rates back to zero, or would that be a catastrophic mistake? Do me a favor, guys, drop your thoughts in the comments, because the debate over America's future is just heating up. And if you found this video valuable, do me a favor, hit that like button, subscribe, and share this with someone who needs to hear the truth the mainstream media won't say out loud. As always, this is Financial Freedom, and I'll see you guys on the next one.